By the way, the Nairobi All Share, which was, as of the weekend, up 10.3% in 2017, it's actually corrected 1% yesterday, off a 9-month high, entered a bull market last week, having rallied about 22.71% since its March 9 low. The Nairobi All Share corrected 1%, so it's up 9.187% so far this year. My piece was about the bull market. According to the popular definition, a bull market begins when a stock, commodity or index rises 20% from a low. Both the Nairobi All Share and the NSE 20 have done that. I said the next leg of this bull market will be driven by local institutions who will need to chase returns. Local institutions have carried an overweight position in bonds. Returns of 12.5% looked outstanding when compared to the stock market, which was posting negative returns. However, just take Safaricom, which is up 13.577% year to date. There is no bond that is going to get close to that on an annualized basis. So the next leg of this bull market will be driven by local institutions who will need to chase returns. And it's a little bit of a slow process because they have to go to their trustees, discuss it with them, come back, write a few memos. So, it's going to be a positive tailwind for the market. East Africa's largest banks all posted a drop in first quarter earnings as the government imposed cap on commercial lending rates, curbed the amount they can charge for loans. Interesting article in Bloomberg, very interesting charts. But they only took the chart analysis up to the end of March. End of March to today, that's when all the banks came back in a big way. As I said, the banks, after a big wobble, have come back with a bang. KCB up over 30%, Standard up 10% year to date. Standard was the only share that in that downdraft held its own. So that's an interesting point, low beta. Equity up 26.66%. That was before this week's trading. I said the rally has been broad-based and has gathered momentum. A lot of folks, particularly in the banking stocks, are chasing dividends, in many cases double-digit ones. So we will surely walk into a correction, might have walked into it yesterday, in these shares when the dividends are paid. Co-op Bank has revealed £1 billion is locked up in Chase and Imperial Bank. The share price reacted badly yesterday, down 6.85%, but it still remains up 23.48% this year. The link to the fundamental share price data is there. Safaricom, which as of the weekend was up 13.577%, eased back 1.15% off a 2017 high yesterday. It's worth about 861 billion. That's about 44 to 45% of the overall stock market value, and therefore, if it's firm, the stock market is firm. Apparently, according to Quartz Africa, Safaricom is looking to be able to focus more on a Pan-African strategy since Vodafone's announcement last week that it had transferred a 35% stake in Safaricom to its South African subsidiary Vodacom. Kengen is now up 34.48% year to date. Take a look at that. That's done extremely well. You remember I was saying about an 8 target with just 20 cents off that. Britam is up 25% year to date. Britam typically has an overweight position in the equity markets, and I think part of that recent response is to do with that. Sasini Tea and Coffee reported a sharp slide in first half earnings per share, 60% down. Share prices up 45.45% year to date. Revenue down 8.416%. Net profit for the year down 60.868%, EPS down 60%. Obviously, the drought impacted volumes by more than the tea price increased. Kenya Airways, that's up 17.94% this year. Take a look at an interview I did with Michael Joseph, the chairman, after the earnings result. Take a look at the earnings presentation that I attended at the Crown Plaza. We also have a video for that. Nairobi NSE 20 is up 7.908% year to date.